Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
What's your approach to risk management in terms of reserves? Do you keep any per property note? How can you better protect yourself in a down market? Okay, that's very prescient, right? That's what we're dealing with, a lot of risk management. And really, Dave Kurtzman, unmute yourself. I just want you sort of on this call.
Go ahead, Dave.
I'm here. I just can't get my video to work.
What's wrong with your video, Dave?
I have a Mac. What can I say?
A Mac? Of course, I have a Mac.
For whatever reason, it won't come on.
Right. So your best thing is your best protection is when you buy. Your underwriting. That's why banks have all underwriting departments to go, given this set of scenarios, what's the statistical risk of default or financial loss? And so basically that's when you're making a loan. In our business, notes secured by real estate, the final payer for the note's the property, right? So that's why, unlike FNAC, First National Acceptance Corp., who has been one of the largest buyers in the market, they're also a regular bank and have been doing originations. They're currently kind of putting the screeching halt on a lot of things because because they'll pay higher than, let's say, I always sorry, I'm rambling. So if the property is the final payer for the note at the end of the day, then I want to make sure that I always took it like hard money lending standards in my mind. It was when I was starting around in this sort of thing in the mid 2005, 6, 7, doing lending, hard money lending, we wouldn't go over 65%. So in the back of my mind, there's a reason that that's kind of standard underwriting, and it's because that helps you avoid most financial loss, even in the worst of scenarios. So that's why a lot of times I don't like going higher than 65% of the value of the property. And then that is hinged upon, do you really know what the value of the property is? I can't tell you how many times I've got a BPO before I bought a note, a broker price opinion or appraisal, and it's much higher somehow than the BPO I get once I have the property back deed in lieu, right? So in some areas it can be harder than others.
Let me just make a point, Dawn.
Yeah.
Be careful of looking at appraisals that are provided by people, because there have been some big court cases in California of totally fraudulent appraisals. They just take a blank appraisal form and create an appraiser, et cetera, et cetera. If you've got to go check out the market yourself. Don't ever trust what somebody else tells you.
Well, we always just order and pay for our own. Is that what you mean?
That's definitely better than one provided by the borrower or the seller.
You never can take that.
Right.
That's for sure. That's for sure. And the next best thing besides just your loan to value or investment to value. And the reason I brought FNAC up is when they're in the mode of buying, they can pay up to 80, 90 cents on the dollar. I would never do that, but because they're a bank and they make originations, they're basing it on credit. And of course, credit is important, but see, their game is buy a discounted note, let it season, and refinance the person out so they get the loan origination that they probably sell off upstream to the secondary market, and then they get that 10%, 20% unearned discount, that they bought from the discount on the note. So they've had a really phenomenal business model. But like right now, even them, they're just like, let's see what happens April 1st. In fact, that one little note in Fallon that I'm trying to figure out how I'm going to close, because I think it still makes sense. It's like, I just want to see if they're the ones, is that payment on April 1 going to come on? I know they're still working on some paperwork to get together, but you know, it's really, really an interesting time. The second thing, besides just establishing the value of the collateral, the house, the property that's securing the note, you've and keeping your loan to value, investment to value to wherever you feel comfortable. Then the second thing is, how much hard cash down payment did they put? So the bigger the cash down payment at the beginning, I mean, those two, if I had to only pick two things, I would go with those. There's 4 or 5 that are just the basics, but do you agree, Dave?
Yeah.
Like, I mean,
skin in the game is
in the game.
It's all about.
Right, because if times get tough, like for people right now, if it's easier, if it's less expensive for them to walk away after they ride out, you know, the moratorium on evictions and foreclosures, they get some free rent or free housing for a while. You want it to be painful, right? For them to just leave you with holding the bag or whatever. So anyway, so in terms of mitigating risk, it's net. You try to have the mindset that you would be happy if this note paid as agreed, or you'd be happy if it didn't. And the times when I didn't follow that advice have turned into some of my bigger seminars. Let's just say that.
And I just want to add that I still own 2 properties that I made 60% loan to value loans on.
Yeah.
And then the market crashed and we lost 50%. And so it was literally underwater at a 60% LTV.
Right. Right. And so, and that was in California, right?
Correct.
Right. So in some states, and I think that's why FNAC for the time being has pulled out of some of these more volatile price states like California, Washington, Nevada. I don't know why Arizona is not on there. Illinois, New York, New Jersey, things like that. But there's one more I'm not thinking of. Ohio, I think. Yeah. Where they consider that will be hardest hit, although any area that's specifically like up where you are, Dave, in South Lake Tahoe, any area that's really dependent upon tourism is going to really be having a hard time. Like Las Vegas, 80% of the people out of business, out of work, right? Casinos closed down, bars, restaurants. So super, super interesting time. And who are some checks supposed to be starting to, I mean, still, that's not going to be very fast for April 1 if someone's hanging by their eyelids for a check for $1,000 or $2,000 from the federal government.
Don, they claim that the checks will start going out in 3 weeks. The last time that was done by the government, it took 8 weeks to get them all out.
Yeah.
But apparently they're not all going to be checks. And if you've filed your taxes using some kind of bank account, supposedly it's going to be a direct deposit right back.
Oh, okay. Well, anyway, it's just like every day I wake up and I'm going, I wonder what's going to happen today.
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.
Basically, let's get down to the basics. What is a note? It's a promise to pay, and I owe you. I owe you this money, and I'm going to pay it back over these terms. Now, in real estate, and ideally, if you're making a loan, you have a security instrument. That means if you don't keep your promise, you're going to lose the asset. It's secured by an asset that can be retrieved and sold to get the lender out of their financial.